Man, they love that bell. There you hear it at 4 p.m. here on the East Coast, the end of the trading day at the New York Stock Exchange. The Dow Jones was up and down throughout the day. We're going to show you a little graph here in a moment, but it did end up. Let's see as the numbers settle, more than 200 points. The S&P 500 and NASDAQ also ended the day in green. The S&P up around 1%, tech-heavy NASDAQ up around 1.5%. So what's going on here? Joined now by Kayla Bruun. She's an economic analyst for decision intelligence company Morning Consult. Kayla, great to see you. We know that there are some encouraging data points released today as it relates to GDP and unemployment numbers, but no one single data point kind of tells the whole story. From your view, though, what was really driving the market today? What's at play?
So the GDP release today, the estimate for Q4, I think was really a big number today. It came in at 2.9% at an annualized rate for Q4, which was ahead of expectations, which is good. But it did represent some slowing from Q3. Within that, some of the drivers I think also are important to look at, which is consumer spending was one of them, which is really good. That's something that's been it's the biggest part of GDP. So it's important to see what's happening with consumer spending. But a little bit less positively, in my view, is that private inventories were also a driver. So within that positive overall number, the increase in private inventories, that's actually a sign that businesses may have accumulated a little bit more stock, which might suggest that consumers actually spent a little less than they were anticipating selling during that fourth quarter.
Okay, so there's a little bit of encouraging news, some concerning data points. The headline, especially to the folks we've spoken with today, seems to be that maybe we are heading toward a recession, but it may be mild. It may be a recession with a small r. The private inventory numbers you've just referenced, though, how does that help fill out the picture of what's really happening and how dramatic a recession may be this year?
Well, we'll get some more information on what's happening with consumer spending tomorrow when we get that monthly figure on personal consumption expenditures. And I think that number is something that's going to be very closely watched, just because the trajectory of consumer spending going forward is going to be very key to growth. I'm anticipating it may, unfortunately, be a little bit weaker than what you might think looking at the quarterly number, just because we did see pretty strong growth in October as a result of retailers discounting. I think that pulled forward some of the spending in Q4. And based on what we've seen in retail sales for December, as well as some of the data we look at Morning Consult, we collect our own spending data. It's looking like we're seeing a little more weakness around the end of the year. So that's really a point of concern. What's happening with consumer spending going into 2023, now that household finances may be in a little bit weaker situation than they were last year.
And all of these separate things are really connected, right? The Fed increases interest rates. That puts pressure on people. On the employment front, people have less money to spend. There's less money out there in the economy. And so perhaps inflation and the cost of things comes down. The Fed is expected to announce another interest rate hike next week. Everyone's wondering what the number may be. But considering you've got these strong GDP numbers, the job market, unemployment numbers are coming down, and there's a shift in consumer spending, where does this all leave us, Kayla?
Well, I think you mentioned the other big factor here, which is the labor market, which it has been very strong. It has cooled as interest rates have increased and is likely to continue cooling because the fight against inflation just isn't over yet. We're going to see more rate increases. We're going to see rates elevated for a while. So the question really is, how much does that cool down the labor market, and whether inflation comes down fast enough to kind of help us have this soft landing that we're hoping for. Because you're right, the labor market, that as long as unemployment is as low as it is, consumers are going to be earning wages, being able to spend, supporting growth. So we'll see what the Fed says. We'll see how the inflation trajectory goes. And then, of course, the labor market is the other big key that may actually allow us to avoid a recession. Right.
Look, it's all very interesting stuff. And where are you joining us from? The Morning Consult offices? We've got to get some pictures in the background. We've got to liven it up a little bit.
I'm working remotely today, so forgive my very boring background.
All is forgiven, and we totally understand. Kayla Bruun, great to chat with you. Thanks so much for being with us today.
Thank you.